in order to break the mold, you got to challenge the status quo. And the reason we should challenge it is the profitability. Once you build some of these projects, you're in single digit margins, which is highly risky, especially going into the volatile world where we're now shifting into. How do you increase those margins and also build maybe a lower cost product? Because the affordability factor is also a challenge.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Mike Angelo is a full-time real estate investor focused on value-add multifamily and ground-up development across the southwestern United States. Mike, welcome to the show.
Hey, thanks for having me, man. Super excited.
Pleasure's mine. There's 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Awesome, man. Started in corporate America. I was an executive sales leader for the last 20 years. Basically, we worked for the construction supply world, so working on selling stuff to contractors. I love the job, I love the people, but I was brutal and I was trying to find a way out. And my exit came in 2019. I got the pink slip and a severance package. And I said, okay, what do I do now? And I knew for sure it wasn't going to be another corporate job. So I had been researching real estate, multifamily specifically, jumped right in, convinced my wife to support us for the next couple of years until I figured it out. And today we are about $50 plus million in assets under management. Couple projects that we've closed now, a couple more projects in the works as we speak, including a ground up development deal. And it's been fun. Definitely wouldn't go back, but it's definitely been challenging at the same time. So we love the space. We love trying to provide housing. But yeah, it's not easy. It's competitive out there.
Jumped right in. I mean, it's one thing to be like, hey, by the way, you're fired. And then you said, I just jumped right into multifamily as if there were a pool of water there waiting, for you to leap into. What does that mean? And how did you jump right in?
I think the biggest thing was listening to podcasts like yours. And there's a group out there, LifeBridge Capital, Whitney Sewell, if you heard of him. I'd been listening to him and it was just eye-opening to go, my real estate experience was consistent of 2 flips in 2007. It's all I had. And he's talking about buying apartment buildings with, syndication process, pulling, investors together and being able to do this. And it's I always thought the country club guys or the big corporate America are who own apartment buildings. And so once I realized that it was possible, 2, I could do this. It's not rocket science. What do I need to do? And it was just go for that. The numbers made a ton of sense. Instead of, buying a duplex or a triplex and just trying to move my way up, I said, I have to find the quickest path to replacing my corporate income. And it wasn't going to be through small projects. It had to be, 50, 60, 70 units at a time.
How did you find and acquire your first property?
Lots of digging around. It was actually kind of by accident, to be honest with you. We were under contract on a deal in Albuquerque, New Mexico, and another city's called Las Cruces, a couple hours south of there. And I just didn't know anything about the market other than I had been there a little bit. And I just randomly found a broker on LoopNet, which is the worst place to find deals, by the way, but a great place to find brokers. And I saw his name and I just called him, cold called. I said, hey, I'm going to be in town. Do you have anything that's coming up? He's like, yeah, I'm getting ready to list a 60 unit deal. And I said, great, send me some info. Would love to take a look at it. Underwrote it, said, it looks interesting, but I'm going to focus my energy on the other one. The other one fell through, unfortunately. And then I circled back to him about a month later. I said, hey, is this still available? He said, we're getting some traction, but put an offer in. Put an offer in, got it accepted, and it took us 4 months to close it, just working through the nuances of our first raise and all that kind of good stuff. But yeah, we got that done in May of 21, so just a little over a year ago.
Man, that's awesome. That is absolutely awesome. Tell me about this. I mean, going through your first capital raise. I mean, that's the 2 things, and I say this over and over, I feel like a broken record on this show, but you probably don't know that. The 2 things we need in this business are money and deals.
That's right.
You found the deal. How did you solve the money side of it?
So fortunately, through I did get some education in multifamily, by the way. So I didn't just listen to podcasts. I went and got formally educated. And I found a couple of folks to help us get the deal done. So one, Michael, my partner, he had some ability to access capital. And, the rest of it was us hustling. It was him and I calling our friends and family. And fortunately, it wasn't the first time, our folks had heard about us doing real estate, but this was our first deal. So everyone's always like, hey, when you have a deal, call me. And so sure enough, if that list was 100 people, they're like, I can't, I'm tied up right now. Or there was always some excuse. And it's always the first one, right? It's a challenge. So it was a struggle, but we got it done. We raised just enough money to get our CapEx deal, our fees and all that kind of good stuff. But a sprint to the end, call it. but definitely not easy. And unfortunately, through that same network, and I think the network is everything in this business. We found our key principal to help us sign on the note, because not only do you need the money, but you got to have liquidity, net worth, experience. We got a Fannie Mae loan, and Fannie just doesn't loan to anybody that wants, to buy an apartment building. So
right.
Yeah.
And so it was through your network that you had joined. It sounded like you joined a mentorship group, which there's lots of them out there, but where, lots of people putting their heads together and saying, hey, we can find the key principal here that can help you sign on the loan. We can have the experience, checkbox checked by this person coming on as a KP in the deal. How much deal equity do you feel like you gave away, or what did you give away in order to make sure that all of those right people were on the right seats in the bus in order to get the deal done?
Our first deal, we were just like, we got to do whatever we can to get it done. I think as I've talked to other folks that have gone through my shoes, they've given 50, 60% of the deal away to get it done. We were very blessed that we didn't need to do that. It was in the 30s, but we did all the other work. So the person that was on our key principal for the note, liquidity, 30%, everything else we did. And so it's an awesome deal. Our investors are super happy right now with. The one thing I will say is, man, we structured that deal to be very investor friendly. And now that it's crushing it, we're like, man, we'd love to get a little bit more of that on our side, but it's okay. It's good. It's a good story to tell, because our investors are now repeat investors, right?
Right.
That's what you want.
Right. Tell me about the way you structured that deal. Can you give us the specifics on the structure of it and how you maybe want to do it differently next time?
Yeah. So we did I don't know if you, in the syndication world, you usually hear kind of 70-30. The limited partner gets 70% of the deal, 30% goes to the house. We did a preferred return of 7%. And basically, we didn't do any IRR hurdles or any of the stuff. I didn't even know what the hell an IRR hurdle was when we were first doing it. So, this thing is cash flowing at like 9 or 10% now. So we're getting a little bit of the scraps, but it's all good. And we've been able to hit our 3-year business targets in year 1. We just did our first year. And so, the market has definitely helped. So everyone looks to be a hero at this point, but we've been able to find a deal that was under market from a rent standpoint and push it. So, yeah, and we'll do the same. I think on the rest of the future deals, it's similar. We're just putting in a few more hurdles. So once we hit like a 19 or 20 IRR, then the split changes a little bit. Right. But it's very nuanced by deal.
Right. No, understood. I just, I've had people come on the show that, had given away 90%. They're doing 90-10 splits on their first deal just because they're like, man, I don't care if I don't make $1 on this, or maybe that's all I make is $1. I just need to get the first one done, and then, we'll worry about, making profit later on. We just want to take care of our investors and get a deal done. So
I challenge that model, by the way.
Yeah.
And because here's the thing, if an investor's giving you money, they expect you to work for that. That is how you're also getting paid. And so you have to be a fiduciary for these guys. And if you're only getting $1, how motivated are you to go work on this deal? It has to be equitable for everybody. And we're very transparent about that. And our investors are good. They're good with it. Do they love our 3.5% AC fee? No, but hey, here's what you're getting for that. And I think that's critical, because everyone needs to make a good amount of money to support it, because it's a lot of work. This is not like, hey, we bought a building, the PM now does everything, we do nothing. No, that's absolutely opposite.
Right. Absolutely. On the topic of money, one of the things that you set out to do in the multifamily space was to replace, obviously, the income that you had before. Have you been able to achieve that yet? This
year, I will hit that target. So it took 2.5 years. 2.5 years. So it wasn't pretty. It wasn't pretty along the way. My wife has a full-time W-2, thank goodness. And I think I mentioned I had a little bit of a severance package, and I followed the Dave Ramsey method. So we had some cash in the bank for that rainy day fund, and it worked, thank goodness. We've depleted through a lot of that, and this business takes working capital. So there's a lot of that, get it in, and then you got to wait till, the deal closes and get it back out and then return it. So this year, we'll hit that number. So we're halfway through 2022, and I'm happy to say I was hoping to hit that target last year, but we didn't close enough deals.
Right. No, man. And I think the reason I bring that up is because, a lot of people either have unrealistic expectations, when they jump in, and some people do. I mean, certainly we've had the people come on the show that are like, hey man, a year ago, I got fired from my job, and now, I'm making 7 figures a year. And you're like, wow, good for you. Like, it can happen. but that's the rule that proves or the exception that proves the rule. Is that the right way to say that? I don't know. Anyway, you get the point where it's like, hey, this is a get rich slow game, and it takes time to build your nest egg, to build your team, to build your properties. It's something that I like to talk about that because it gives some realistic expectations for people that are looking to get in and grow. That this takes a lot of time. So, thank you for being willing to share that. We talked a little bit off air about development and development deals. Tell us what you guys are doing on the development front, how you finding opportunity there, and why development.
Great. Awesome. So when I left the corporate world, the first thing I always wanted to be a developer. I just had no business doing it because I didn't know anything about it other than, they need stuff to build it. So we said, hey, let's do multifamily value add first. Let's build a cash flow. Let's build a resume and let's pivot into development. Because as being in Phoenix and is one of the hottest markets in the country, you're buying value add deals. There's a kind of per unit cost and that those are trading for, and those are 1970s, 1960s, even properties. Right here, trading for about $250 a door, right? Yeah. So, when you look at the replacement costs and you look at, ground up construction, those are similar costs per square foot, per unit, however you want to look at it. And so then you kind of scratch your head, go, I can build something brand new, rent it for at least a few $100s above a value add deal. Yes, it takes me 2.5 years to build it, but that makes a lot more sense. And the yield is, very good. And so it's just a different way to look at the same problem, which is we don't have enough good housing. And so that was our kind of mantra, say we got to figure that out. And then I'm trying to break the rules here and do things differently. We've had traditional, home builders doing stick frame building forever, and it's an antiquated process. We have so much technology around us, but construction really hasn't innovated. And so we're trying to push those boundaries. And there's lots of guys doing those modular solutions and finding ways to build better because we have a labor shortage. We have housing shortage. We can't produce quickly enough. So we're trying to figure that out. And so we found a great partner. We found, some developer experience and contractors locally that are willing to help us and also break the mold of the traditional, hey, we're going to do it this way. And so it's early on in the phase. We bought the land last year and we're in the entitlement phase. So that's improving the property on paper, essentially, and working to get that green light so we can be shovel ready in the next 60 days, hopefully. What
will you be doing to break the mold, as you say?
It's finding this network that we talked about. It's called industrialized construction. So think of, Tesla building houses and factories. Now when you think modular, most people go to mobile homes and that's not what we're doing, right? We're building high quality product just in a factory environment. Finding the network, right now, I think 5% or less of all construction projects are built in industrial modular fashion. So that prefabricated method. So in order to break the mold, you got to challenge the status quo. And the reason we should challenge it is the profitability. Once you build some of these projects, you're in single digit margins, which is highly risky, especially going into the volatile world where we're now shifting into. How do you increase those margins and also build maybe a lower cost product? Because the affordability factor is also a challenge. We have a huge middle market America that can't afford $1,900 rent for a one bedroom. So can we charge $1,500 or $1,400? Well, you can't if it costs you so many dollars per unit to build. So that's the problem we're trying to solve, is how do we build it for lower cost? And the only way to do that is to make it more efficient and use smarter products and then try to solve the problem the other way. So that's the why.
Tell me about that a little bit more. Industrialized construction. Have you guys settled, assuming you get the property entitled, have you settled on a particular, hey, this is how we're going to build this product. This is how we're going to put it together. This is going to be the supplier. This is going to be, timeline. I mean, have you solved all of those factors yet, or is this? No,
I'd love to say yes. And we thought we had it solved from a complete, hey, build the entire unit in a factory. The challenge is I'm again uphill battle with majority of America, and even local contractors are like, dude, you're crazy. Don't do that. And so what we're going to do is something in the middle. It's prefabricated cold form steel. So instead of building out of wood, we're building out of light steel studs, and you still get that fabricated panel. So you got a floor, you get walls. Assembly is almost as quick as building it in the factory. And then you have your finishing crews, your mechanical, electrical guys coming in and putting the rest in. So there's still labor on site. I would love to get to a point where I have an incomplete, wall, exterior, interior, plumbed, and then it gets assembled. That's where I'd like to get to. We're not there yet. I think it's, again, that enforcing people to think about even robotics. If you think of a factory, instead of having labor there, you have robots doing the stuff. It sounds super high tech, but that's where we're going.
Speed to implementation advantage.
Usually you could save between 30 and 40% of time. So if a multifamily, call it a 3-story, boring 100-unit deal, wood frame will take you 18 months, 24 months. You might be able to do that in 12 to 15.
Okay.
So speed to market is one of the main reasons, but that comes with a cost. And so folks get hung up on, well, it's going to cost me more on paper. Well, it might cost you a little bit more up front, but now you don't have punch list stuff. You're saving holding costs. Holding costs are incredibly expensive. So we haven't got it all figured out. We're getting there slowly. First project, right?
No, absolutely. And again, these are things, I know you don't necessarily have all of your ducks in a row on this yet, but I think it's a great time for us to chat about it because you get to see the inside view of kind of the problems you're trying to figure out and solve as you go through this. So maybe you don't have all the answers, but it's like, hey, here's a way that this could work. If we had it in the ideal world. I guess one of the other things I would think about in this kind of prefabricated, development space is that you probably have a much more consistent product. Would be one of the things I bet you would get out of something like that.
Yeah, quality, consistency. And so I would say the other piece of challenge is the red tape amongst municipalities and inspections and, hey, you're building something in a factory. I can't inspect it on site like I've been doing for 50 years. Okay, yeah, we'll come to the factory. Let me show you what we're doing, and we're building a better product. So it will get there. And I'm telling you, there's probably, I think, a dozen or less firms working to solve this problem. We are the tiniest little guy on the development front. I think the solution is vertically integrate. So you're the developer. You need to have access to a manufacturer, whether that's your partner or you doing it yourself. And that way those products just flow through. And there's a couple big companies doing that right now. So we're looking to align with them and understand how they're doing it. And again, not reinvent the wheel, probably just partner with them and say, put us on your list because we need, 1,500 units in the next 2 years. That's kind of our
next
vision.
question is about codes on that, like dealing with codes, dealing with your local municipalities. I mean, it's one thing to find a cool product. It may be the perfect fit, but getting it through your local zoning and building ordinance departments may be a nightmare. How are you guys navigating that?
So all of these manufacturers are building to International Building Code, IBC, right? The latest building code. So they're better products than anything that's being built on site. The challenge is the local municipality, like you just said. So it's getting them aligned early. Those fire marshals, the city inspectors say, hey, this is why we're doing it this way. And the groups that have been successful thus far, they align very early on and they partner with that developer to, say, hey, we're going to build 6 of these. The first one's going to be the hardest because that'll be the trial project. But once that municipality buys in on it, then now you're building within that county or that city. Then you're rubber stamping from a production standpoint, and that approval process becomes easier. The other challenge is the subs. If you're an electrician and you've been doing it traditionally forever on site, and you got to hire 50 guys to do this, well, you might only need 3 guys now on site because all the work's being done in a factory. So that's a mind shift as well. Change on how you staff it.
Right. Yeah. I can only imagine. Yeah. Getting your subs educated, getting everybody in your team built around this. But I think, the long-term play is what you're in it for here, in that once you get the kind of kinks worked out, it will become a much smoother process. So I look forward to tracking with you on that. You do have 2 developments, I think you said, underway. Are both of those in the kind of prefab construction space, or are any of those going just traditional builds?
So we have one multifamily project we started earlier, and then this month we're closing on another piece of land that wasn't on our radar, and we already had a lot on our plate, but it was such a cool project. It's actually so I'm in Phoenix desert, but we have an area called Pine Top. It's up in the mountains at like 6,000 feet. And so we're buying some acreage up there for single family development. And we still are talking to a couple of modular builders because, again, it's the same problem. How do we build it faster, quicker? And so we're taking on a single family development. Again, our developer that we partner with is helping us navigate the complexity of that. But that'll start hopefully in the next couple of months as well. And so, yeah, we're taking on a lot of things, but it's fun to try to solve problems.
Absolutely. As you review the last 2 years of your, multifamily and commercial real estate experience, is there anything that you would do differently that would either speed up, save time, shave some learning curve off? Is there anything that you would do a little bit differently if you could do it over?
I think I spent a lot of time underwriting because, I didn't have a ton of net worth. I didn't have a lot of liquidity. So I passively invested in a few deals, but I was like, how do I bring value to if you just talk about the multifamily space, again, you need key principles for experience, liquidity, and you got to find the deal. So my goal was I'm going to go find a deal, and then I'm going to go find partners to bring in, and they'll sign on the note for me. And that was kind of the education that they teach you, by the way. Right. And so I just spent a ton of time looking for deals and not enough time finding partners, good partners, vetting them. And that key principle would have made life a little bit easier on, hey, we need this much cash for hard money, earnest money. We need, this much and we didn't have an investor base other than, friends and family. And so, I would say if I did it again, I would go back and spend a little more energy vetting those partners earlier. It took me almost a year to kind of figure that out. I had partners come and go, and but would I change it? Maybe. What I learned in the process is, man, I can underwrite really well in the conditions that I look at. And now, fortunately, I have a team that can help us do that, and they do the majority of the underwriting. So delegation, and I may be doing more of that, getting out of the weeds. And I told you I was up till midnight doing a YouTube video for our investment webinar. I need a marketing person. Right? I shouldn't be doing that, but it's what you got to do when you're early in the process.
That's absolutely right, Mike. I appreciate you taking the time to come on today and share with us your story. How you have grown to where you guys are today, what your thoughts are surrounding development and solving the housing shortage problem, and doing that in a very creative way. Thank you for taking the time again to come on and share today. Certainly appreciate it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, awesome, man. Thanks for having me on the show. I'm on LinkedIn. It's Mike Angelo. You can email me if you want. It's mike@nkdevelopmentgroup.com. Love to reach out. I always challenge folks on podcasts. Call me if you're in the same struggles. Let's set up a call, and I'll be happy to talk to anybody and try to help them through the process.
Awesome. Mike, thank you again for your time. Certainly appreciate it. Have a great rest of your day.
Thanks, man. Take care. Cheers.